Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk about the US dollar. The DXY held steady just below 97 after volatile trading, supported by stronger than expected labor data. Non-farm payrolls rose by 130,000 in January, which is the largest increase in over a year, while unemployment fell to 4.3%, suggesting labor market stabilization. Initial jobless claims did come in higher than expected, and attention now shifts towards tonight's upcoming CPI for further inflation signals. Markets currently expect the Fed to hold rates in March, with two cuts priced in later this year. Technically, the broader trend remains downward. The index is trading within a short-term range between 96.49 and 97.76, with support holding near 96.49. A move into the 97.3 to 97.76 retracement zone could open the path towards the psychological level of 98 and the 50-day moving average near 98.12, while the 96.49 to 96 region remains key support for the short-term structure. Next up, let's have a look at crude oil. WTI slipped below 62.8 as oversupply concerns weighed on sentiment despite ongoing Iran-related geopolitical risks. The IEA reported global inventories growing at the fastest pace since 2020 and projects oversupply into 2026 as supply outpaces demand. Returning Venezuelan supply and strong inventories are reinforcing those expectations. From a technical standpoint, the main trend remains upward. A break above 65.64 would strengthen bullish momentum towards a $66 region and potentially higher, while support sits around 62.25, followed by the 61.1 area where downside momentum could begin to shift. Next up, let's have a look at gold, our favorite. Prices dropped more than 3%, falling below 49.20 amid cross-asset liquidation as investors sold metals to cover losses in other markets. Despite yields falling and expectations for rate cuts remaining, flows were largely driven by deleveraging rather than policy repricing. Fundamental support persists from central bank buying, softer yields, and geopolitical uncertainty once liquidation pressures ease. Technically, the short-term bias is to the downside, with prices below key moving averages and resistance around the 50.12 to 50.49 zone. Support sits near 4,800, the psychological level, and the 200-day moving average around 47.69. Indicators have also turned bearish, with RSI trending lower and momentum crossing its midline, signaling for potential lower lows. Lastly, let's have a look at the Australian dollar, which climbed above 71 cents to a 3.5-year high after the RBA maintained a hawkish tone. Officials signaled readiness to hike further if inflation persists and inflation expectations jump to 5%, reinforcing that stance. Markets are now looking towards May for potential tightening as policymakers assess the incoming data. On the charts, the pair remains in a strong bullish structure, trading above its 9-day moving average and forming higher highs and higher lows since December. Momentum indicators remain positive, with resistance near 71.57, followed by 72 cents, while support sits at the 70.40 level and the psychological 70-cent level. That's all for today's morning market analysis. As always, manage your risk and happy trading.